the political side of it, and then there's the real story.
There's a lot to unpack right there. It wasn't quite the interview I thought that was going to be.
There's a reason for it.
This will be officially my favorite podcast I've ever done.
I saw this last week that MicroStrategies issued a convertible bond at 0.62% of a yield with a 42% premium to the price. And I consider myself to not be stupid. And that got upsized to, I think, 800 million or 700 million with a $100 million, maybe a boot or a shoe or something. I'm curious as to what do you think that says about where we are with Bitcoin? If it does say anything at all, I don't know. But you know, he's been dead right. He was wrong for a little bit. If you look at short term, he's looking for a long. I mean, he has a long horizon. So I'm a huge fan of his white paper. I'm a huge fan of him and his philosophy. And of course, I'm mine Bitcoin for our company, and I'm long Bitcoin. So I'm not in any way suggesting that Bitcoin's topped. Everyone knows who watches this program, I'm a massive bull on Bitcoin and will be for the next 20 years. But I'm curious about that particular bond offering, if that raised any eyebrows for you or no.
Well, it was a big conversation with the institutions behind us. And in December, what he does is he tracks the MicroStrategy price relative to Bitcoin. And sometimes it's just like anything else. There's an underlying value to the company. So think of like MicroStrategy. MicroStrategy owns a lot of Bitcoin. Mm-hmm. So if the stock price trades at a huge premium, he's a brilliant capital markets guy. And what I mean by capital markets is when he comes to market, like in December, there was a big spread there, and he sold convertible bonds because the premium of MSTR, MicroStrategy, relative to Bitcoin was extremely large. And then lo and behold, there was like about a month later, MicroStrategy and Bitcoin, it took a pretty big hit. So that was a short-term leading indicator. And like you said, he just came to market again. So what he does is whenever he sees MicroStrategy, the value of the company, the market capitalization relative to the Bitcoin price, he very quickly comes in, sells that, and that's kind of a convertible bond. That's definitely been a pretty good leading indicator.
Right.
The short term, like you said.
But what's and maybe I'm just, to the average person, can you explain to them why the yield was only 0.62% for a 7-year bond? Like, or what made sense there for that bond? What's the logic from the buyer's perspective?
Well, there's such an incredible vol. That's the thing about the convertible bond market is it's really what we call the last saloon. So it's typically a place where highly speculative companies or companies that don't normally get great financing from the banks can come in and so if you were to issue a high yield bond today, it's extremely expensive. You're talking like for say single B, double B, you're talking about like 9%, sometimes 10% in that case. So MicroStrategy, because the vol on the equity is so high, he can bring in a lot of it's very attractive for institutions to buy a low coupon bond from him because they can make so much money trading the implied vol around it, which is complicated. But the higher the vol, the institutions sometimes they'll arbitrage it, so they'll be short the stock and long the bonds. But that's the beautiful part about convertibles is that you can issue a bond with a much lower coupon than you would if you have to issue.
And that's sort of the Liberty model, right? You see a lot of exchangeable notes that they issue with these fractional rates, but there's an arbitrage between the two of them.
Yes, and that's why we want to keep an eye on these guys, because what we talk about in my book is that it's really, like I said, the last. So I'm not saying MicroStrategy, but if you look back, the history of the convertible market, I would say 90% of the what do we call serial issuers, companies that issued more than one, Lehman, Fannie Mae, Sunbeam, you could go on and on. Like the companies that come to that convertible market a lot, Chesapeake, those companies typically have gone bankrupt. Tesla is one that has it. MicroStrategy is one that has it. So there's some that but I would say 90% or 88% of the serial issues, some companies that keep coming to the convertible market, that's typically a warning sign. Tyco, Calpine, these are names over the last 20 years, but it's a little bit of a warning sign if a company's coming to the convertible market a lot.
Larry, how old are you?
I'm 58 now.
Right, so we're 4 years apart. We're speaking almost the exact same language, whether it be Calpine or Sunbeam, Chainsaw, Dunlap. I know that name well. It's one of the biggest trades of my career. I actually sold that position out at $29 before it went to zero for a really famous guy. And I remember the times when Dunlap was saying everything was fine and it wasn't. These are just, and Calpine's another example. And people have short-term memories. They forgot that Southern California Edison, which was, I think is Edison International, they forgot it went bankrupt. There's all these things that have happened in yours and mine's lifetime that it seems like people ultimately forget. What did you make of the whole diamond hands, GameStop nonsense that valuation doesn't matter? I was curious as to when this was all happening, what was going on in your head?
Well, one of the things we talk about in When Markets Speak is what causes those moments, right? And so when central banks are offering accommodation at a very aggressive scale, what it does is it creates situations like GameStop or Archegos, and these are things that happened in 2021 where NFTs, where you just get an extreme amount of frenzy speculation because the central bank is offering so much accommodation. And so what I found is that a lot of times the value of things, and this is the point we make in the book, the value of things really depends on the direction of the central bank accommodation. And so what happened is we had a low inflation period in 2020. There was complacency. The Fed then had to start hiking rates. And the moment they started to just talking about hiking, those types of stocks and crypto and anything and NFTs and ARK stocks, those types of stocks were incredible. They were the first wounded, right? They really dramatic pullbacks. And then on the bullish side, the moment the Fed, and this is where crypto has been incredible, the moment the Fed just started to talking about easing, which they started to do in December, right? The moment they did that, these types of things started leading to the upside.
Sure.
And that's one of the big reasons why crypto started to form so well was that. So a lot of times people are long these things and they have really sexy, beautiful stories like crypto or GameStop or ARK stocks. But at the end of the day, you're really just making a directional bet on where is the central bank? Like, what is the central bank doing for me? If the central bank decides to hike rates aggressively, those types of securities typically have a rough patch.
Yeah, I'm reading this quote, sooner or later, everyone sits down to a banquet of consequences.
Robert Louis Stevenson.
Sometimes I wish I wasn't a student of the market, because the funny part is it's hard to fight people at the moment in time where they think that trees can grow to the sky and nothing ever happens and nothing goes wrong. And of course, right now, me owning data centers for Ault Alliance, and we do own some fairly big developed data centers and ones that are developing, really developed and getting bigger. I'm proactive. Obviously, NVIDIA is the driver around AI and what's happening with data centers, and so we're a beneficiary of that. We think ultimately we'll own 2 big AI data centers. Ultimately, hopefully, sell them someday. You never know what can happen. But I'm curious as to how long you think the banquet lasts with NVIDIA, or if you even have any commentary around what's happening at AI and data centers. Because to me, we got in data centers 6-7 years ago, and we're getting in a big way. But you can see that this is sort of like what I can saw, and other people have. I don't know who to give credit to this for. Sort of the 4th industrial revolution, which is AI. And people can get hurt in AI, right? I mean, they talk about, I'm trying to preface this question by saying Buffett said many times, you would have been better to shoot the Wright brothers because no one ever made any money in the airline industry. when people started flying. Although the efficiency of flying, you can't question, right? I mean, it's much better to fly than it is to drive a covered wagon. But what are your thoughts around what's happening with this sort of froth around AI, or is there no froth right now?
Well, the biggest thing that we talk about in the book with AI and crypto is that we have the last 10 years. If you think of like 2014, in 2014, if you took the capital investments in metals mining, your key green metals, and your metals that are going to be necessary to solar and wind, and then your energy, so your natural gas, your oil, if you think of those investments from today, the pace that we were on from 2010 to 2014 to today, that pace, we're now down about $3 trillion. In other words, because of, I don't know, it's not the Green New Deal, because of politics, for a whole bunch of reasons, we have really persecuted a lot of fossil fuel development. And the green companies that are supposed to replace this are nowhere near ready. And so that's the supply issue. And right now, since 2014, there's about an extra 900 million people on the planet Earth. And so a lot of those people, as we talk about in When Markets Speak, are making more money. If you're working in a call center in India, you're making 10 to 100 times more than your great grandparents. And so we've created a whole bunch of new consumers of energy. At the same time, on the demand side for energy, that's where you get into this whole crypto and AI and the whole equation. Here's the stat that's in the book. So NVIDIA's latest quarter, $18.4 billion of revenue from data centers, right? 18.4. But NVIDIA's stock projection of growth is really profound. So that we're expecting a lot more data centers, a lot more growth there. So in the United States, data center usage was near 400, and this is of energy, 460 terawatt hours in 2022. So just think 460 terawatt hours in 2022. But the growth projection for NVIDIA and for crypto is so spectacular that number of terawatt hours could be 1,000 to maybe 2,000 in the next 5 years. And that's equivalent to like 2 Germanys in terms of energy usage. So I think with a high probability of certainty that around 2025, 26, we're having an explosion. As you well know, the higher crypto goes, the more processing power. And it's similar with AI. The more complicated the programs that they have to solve, or the calculations, the more energy. And so you're talking about a world that is really divested from fossil fuels and the types of energy sources that will be able to fill that supply-demand hole. We've got a $3 trillion hole there. And at the same time, on the demand side, like you said, this is a new industrial revolution. So people are very excited about buying AI, but you really should probably, think about, what else do I want to own? I might want to own some Schlumberger. I might want to own some, Buffett's been buying, a lot of the oil companies, Chevron. Mm-hmm. And so it's the oil and gas company.
Oxy, he's been buying Oxy like crazy.
Oxy, much more than Chevron. Yeah. So Buffett knows something, and we're going to have a real energy crisis in like 2026, 25, 26, similar to like the 70s, where we have a big gap between supply and demand.
Yeah, I talked about earlier about us owning data centers. We own a mega data center that it's my understanding that in Michigan, we are the single largest point in Michigan in terms of power. We're running currently about 30 megs, and we're going to go to 300. That's the plan. And the demand for this over the next few years, I'm reading, we're going to run out of power. So I guess I'm excited to read your book, and everyone else should be pretty excited too, because you do have the credibility. There's no question about it. What's the bear traps report? For some reason I know that, and I don't know why I'm having a brain fade. Is that your report? I'm asking about it because you created it, and I'd love to know about it.
Well, I think that, there's no I in team, right? And
Right.
so you want to surround yourself with a great group of people, but you also, as you get older in life, and I think you've done a great job at this, it's like, Todd, is like democratizing information.
Sure.
And so what we do is we host institutional investors in a private setting, and then weekly we kind of recap, okay, what are the institutions doing? And so we will kind of like sit down with the professional investors, like we're hosting hedge funds and mutual funds and pension funds in New York this month. And then we'll kind of like, okay, what are the institutions doing? Because right now, investors watching us, they can get research from TV, like CNBC or Fox, or they get research from the sell side, but typically a lot of that research is biased and skewed. And so what we try to do is just like, okay, sit down with our institutional investors, think about what are the professionals looking at, where are the trends, like uranium. Think about this. One of the things we talk about when markets speak is like, how are we going to bridge the gap between where we are now in the supply demand? And a lot of the professionals that I talk to around the world, I can just see by the conversation. Like 2 years ago, in our conversations with the hedge funds and mutual funds, very few people cared about even talking about uranium. And now the uranium infrastructure is so small relative to, like, you're going to need a lot of nuclear power plants or small modular plants to sit next. That's the big thing is, I think in a number of years, you'll have small modular plants next to some of these data centers, and that's going to fill the void. But right now, everybody's just like the media is focused on, it's almost like the .com. Everybody was focused on Cisco and Global Crossing and the big, like high profile infrastructure. Meanwhile, billions of dollars are going to be made on all the companies that feed into the new industrial revolution.
Yeah, was it Token Ring Networks or something back then? Global Crossing and Cisco
All these stocks, a lot of these stocks went to zero.
And Juniper Networks and all those things. Although Juniper just got bought, but I was there for all that. It was the most. I will tell you, one of the most insane times of my life was during the .com boom. I'd never seen anything like it in my life. I don't know if I ever will again. The way that happened, that was so biblical. You would buy something on a Monday, by Friday, a $9 stock would be $100 by Friday. And it was a frenzy of biblical proportions, Pets.com, Cosmo, all the things that were going crazy back then. Do you, in your book, are you talking about the economic outlook looks grim? I want to give you a chance to sort of clarify what you mean by it looks grim, or am I misunderstanding what you said there?
Well, it's more about, for some parts of the economy or some parts of the market, the opportunities are incredible, but we've taken 5 million jobs out of the United States, right? So we've taken 5 million jobs out since the last like 20, 30 years. We've exported them around the world to all, so your Bangladesh, your India, China, and we've increased energy demand and consumption around the world. But we've created a lot of inflation because there's much more energy demand from countries like India, and you get a larger, right now there's been so much, like think about Donald Trump, right? Donald Trump was very fortunate because when he came on the scene, the United States had been decimated, the Rust Belt, we've lost all those jobs. His father's in the Rust Belt that go home, after spending the day at the library because they can't admit to their families that they don't have a job, And so this country has been decimated by technology, by globalization. And so a lot of that is now because, look at what Joe Biden's done and look at what Trump's done. They want to reshore jobs. If you look at the construction of, say manufacturing in the United States, we're going to reshore a lot. This is in theory. Trump wants to tariff China 100%. They want to bring all those jobs back. That's very inflationary. And the benefit of the global economy was very deflationary. So the big trend the last 20 years was globalize, export the jobs. All of a sudden COVID hits, and Bob Kraft from the New England Patriots has to send his team plane over to China to pick up masks because Boston we literally didn't produce enough. We couldn't produce enough in this country, right? And we don't produce enough uranium. I could just go on and on and on. We're not producing enough things. So if you reshore in size, that creates much more sustainable inflation. And if you're in a more sustained inflation world, then you need a whole new portfolio construction because most of the stock portfolio construction today was designed for a deflationary, disinflationary world.
We own a company called askROI, Risk on International, and it is an AI program that lets you put all your data in it, and it's your data. I mean, I could put your whole book in it and ask it any question. It's just the most fascinating thing ever about how AI is being used. And yet our talking points are, hey, this is going to make your employees more efficient. But it doesn't seem like that it's going to eliminate a lot of jobs, or how do you, like you're a student of this risk, how do you see AI affecting employment? I'm curious as to what your best, and I know it's a guess, what your best guess is on what AI does to the economy.
Yeah, so this gets into the whole inflation deflation debate. And you just look at graphic designers, you look at advertising. There's just so many jobs that there's many parts of the law profession, legal community that is in real danger. And so, yeah, it's going to have a massive impact. And what does that do? That creates more social stress. Right now, the U.S., we're already running a $1.9 trillion deficit this year after 1.7 last year and after a couple of $3 trillion deficits. And so your stresses on government and your stresses on government spending are going to be pretty significant. That creates, if the government has to spend aggressively with higher interest rates, then all of a sudden the Fed's going to have to hold those rates down. That's very negative for the dollar. And so I just see a situation where I think net AI creates definitely a lot of unemployment, creates more productivity, but then it creates these backstage stresses that create a lot of secular negative forces for the dollar. And it's not just AI, but it's a whole bunch of things which we can get into.
When you speak of the dollar, are these BRICS countries this sort of like idea where the petrodollar is not going to be the standard currency? Is that a real threat, or is that a threat that we think about but really isn't a threat yet? And I say this because who wants rubles and who wants Chinese currency? But I guess someone does.
Yeah, and I'm not one of and the dollar's not going to lose its real muscular global status that it has. Like, it's not going to. We're going to be the reserve currency in 10 years, most likely. Mm-hmm. The China yuan's not, or some currency dictatorship is not going to replace the dollar. But people have to understand the dollar is in the high 60% of global trade. If the dollar loses 10 to 15% of its stage, it's still a huge deal. It'd still be the global currency, global reserve currency. But it's the problem that we talk about in the book is that when you use sanctions, and this goes back through Trump, it goes to Biden, it goes to Obama. If you look at the way sanctions have been used against emerging market countries the last, say, 20 years, you're talking like significantly more aggressive sanctions than we've ever done. In other words, when you use sanctions, you're talking about a weapon that should be used once a decade, maybe twice, in certain key strategic areas. But we've had presidents just abusing this horse and this weapon, and it's like you said, it's creating an enormous backlash around the world. You can already see countries are trading things in other currencies. So it's not that the U.S. dollar is going to lose its reserve status, but does it lose 10 to 15% of its stature over the next 10 years? I think that's nearly certain.
I thought the big risk was when the country started punishing Russia and sanctioning oligarchs and taking their assets from them, we really risked the dollar because the dollar was a sanctuary for a long time. And the first thing I was concerned about was, while it looks like it's a great move, like you're really doing the right thing, you're really doing the wrong thing because you're basically telling people that have accumulated wealth, we're going to punish you, and we can't trust. You can't trust the U.S. government not to take your stuff, right? Or to make, and not to make other governments take your stuff, which is really where I became even a bigger bull for Bitcoin. I looked at that. I really thought a lot about how would I feel if the Russian government was taking my boat, right? If they decided that I was an oligarch in the U.S. and they're going to take my assets from me. And that was the moment in time where I got clarity that Bitcoin is going to disrupt pretty hard the world, right? It's going to disrupt it in a way, whereas if everyone accepts it and everyone believes in it, it'll become one of the reserve assets out there, right? It's easy to transfer. There's no cost really to transfer it. It's highly liquid. It's developed into a very liquid business model in terms of availability. I mean, I guess they could try to restrict your ability to convert from Bitcoin to fiat, but that even seems to be harder to do than they thought of. I'm curious as to, in your modeling, your sort of 21 systemic risk indicators, all the things you look at, where does Bitcoin fit in your universe of assets and risk factors or positive outlook on Bitcoin?
Okay, the one thing that I think is so important on Bitcoin is that people need education in terms of, like, to hold real wealth in something that loses 60 to 80% of its value 4 times in 5 years is very hard, and you can do it with small amounts of money, but the reason why the gold and other assets they hold so much more wealth. Gold's largest drawdown in the last 20 years, I think, is 19, maybe 10 to, it's somewhere around 19%, right? And so imagine having $1 million or $2 million or $10 million and putting it into a bank. Like you said, then you have to worry about, say you're a foreign national, you have to worry about the White House or somebody coming after your money, some government. But imagine having $10 million in an asset that fluctuates. We're talking like since 2017, 4 drawdowns of 82 to 60%. And so it's very hard for a human being that has a lot of wealth in that asset to maintain wealth in that asset. I think over time, there's no question that Bitcoin is going to have less volatility over time and be a larger store of value. I just know personally some younger, over the years I've done so many speeches. I've been a CNBC contributor. I've met a lot of investors, and I do know a lot of younger people that have really been, a couple of kids have been destroyed by crypto, by NFTs. And so people just that's why they need people like you. You got to educate people on, like, okay, you got to be careful because, and by the way, if you ever talk to Michael Saylor, Michael Saylor, Map MicroStrategy, we need to hear from you at the lows as much as you are speaking at the highs. It infuriates me that when Bitcoin gets really expensive, that there's a whole host, and Michael's he's not by himself. Literally, there's a lot of these people. You want to get people involved in Bitcoin when it goes on sale. And so that's my only thing, I think. But other than that, it's going to be it's part of the book. We make the case. It's going to be part of that portfolio of assets that you're going to want to have in this new world. So I'm a Bitcoin bull, but I'm a Bitcoin bull at a price and at the right price.
Yeah, I mean, Charlie Munger and Warren Buffett talked about for years that Berkshire Hathaway had like 3 or 4 pullbacks of more than 50% or so, and they were willing to buy more, but even that was sort of an unacceptable pullback, but that it happened, and they understood the underlying value. my board did not want to go all in on Bitcoin and actually put it in treasury the way I wanted to. That's not their, I don't know if they'd be a big fan of me saying it that way, but they had a very valid point, and that is that the volatility of your corporate assets, you just really can't maintain them there in dealing with that kind of volatility. But I was able to convince them over time that we needed to mine Bitcoin. But even then, the volatility in mining, with difficulty rates going up and power is an issue, these are really difficult times when you have the kind of volatility you have. So you kind of live by the sword, die by the sword with Bitcoin. But one day, you would expect, as it becomes more standardized, that there's not going to be as much volatility in it. But there has been a horrendous amount of volatility in it, something that I guess has been exacerbated by the sort of rush of the ETFs recently. I wondered if you, before you saw the ETF approval, did you think that the ETFs would have a biggest influence on them becoming available? I mean, was it that simple to call that shot? Because I always thought, well, if you remember when the approval happened, they actually traded off for a little bit. And then they steamrolled, right? And now you're mining 900 Bitcoin a day, current miners. You have a halving coming up where you're going to go from 900 to 450. You got difficulty rising as more miners come online. And you got a higher price that's keeping up with difficulty. But it seems like to me the scarcity of Bitcoin will lead to more parabolic moves. I'm curious as if you've given that any thought or not.
Yeah, I mean, at the end of the day, though, it's the ultimate risk on currency, or I guess asset. So what drives it is the Fed offering accommodation, liquidity, lots of liquidity pushes assets into all, even NFTs are starting to come back, right? So what the Fed's kind of been doing is it's an election year, there's an awful lot of liquidity. And so when there's lots of liquidity, and you look at bank reserves, we look at a whole bunch of things in the book. And this is what people need to understand, because the story about Bitcoin is so important and it's so real and it's so valid. But behind the scenes, there's all these liquidity issues that the central banks are playing with, and even people like Jamie Dimon, they're playing with all those liquidity issues in the back in an election year that's supporting. But then you want to watch out for stages when they pull back on accommodation or liquidity, and then Bitcoin, moves a much greater percentage than any other asset on the way up and on the way down. And a lot of it has to do with, what I looked at is every time the VIX, so think of the VIX, the volatility index in equities.
Sure.
But we went back 20 years. Like most times the VIX went above, say between 20 up to 30. It was amazing how each time Bitcoin drawdowns were very significant. And I know there's been a few exceptions, but for the most part, if there's volatility, you would think that, in a case like think the war last year, right? Well, not 2 years ago, when Russia invaded, you would think that period would have helped Bitcoin. But because the VIX was so high, it creates a risk off, and also there was a withdrawal of liquidity. And so Bitcoin that had this incredible story for this incredible moment, suffered because of really liquidity and volatility having an impact on the asset. When meanwhile, it was a great buying opportunity.
I realize this question's probably too difficult to answer, but I want to take all your experience, your real-world education around Lehman Brothers, and deal with the following, and that is, you have a $1.9 trillion deficit, you have a really heavy debt burden relative to total GDP, and yet I'm 54 years old. I've probably been hearing since I was 10 that we can't deal with these deficits. I know we had a balanced budget under Clinton for about a minute, maybe or so. It's funny to me that Clinton seems to be the rational president now, the guy who was like, hey, we got to deal with these borders. And I bet we all long for the days of rationality. But I'm curious as to what with all your risk assessment, systemic risk, do we just keep punting the ball down the road, kicking the ball, 50 yards ahead of us on the debt market with the U.S. just taking on more and more burden in terms of its overall. I don't understand how we ever deal with it, or do we grow our way or inflate our way out of it? Like, what's your thesis on the long-term viability of U.S. debt?
Yeah, that's it. When you hit 34, 35 trillion and you're running deficit, we're running deficits at 6 to 7 to 8% of GDP. The last, now you just mentioned, we all grew up with debt horror stories. Remember, there were periods of Reagan, and there was different periods of Reagan actually blew out the deficit, right? But the long-term trend of annual deficits as a percentage of GDP is really like 2 to 3%. And we're running things now 6 to 8%, which is what you typically do in recession to get out of the recession. So what's happening is there's an important election. They don't like Trump. They impeached him 2 times. They've got him in 4 different court cases. So they'll do, they want to really influence this election through preventing a recession, through massive stimulus, right? Massive fiscal. And that's one of the reasons why the recession hasn't materialized, even though there's a ton of recession indicators, which typically, have been right for decades and decades, whether it be ISM or whether it be the leading economic indicators, whether it be the yield curve. There's all these major ones that have all been signaling recession. But meanwhile, Washington is just running these colossal deficits that are much greater, to the point where interest on the debt now is $80 billion a month. And that's literally going to be overpowering the defense budget or Medicare or Medicaid. So what happens, and this is where you could get the big secular up move for hard assets and Bitcoin, is when the Fed is forced to really hold down those bond yields, because if there's less bond buying from China, less bond buying from Japan to some extent, less bond buying from Europe. Europe has to sell more bonds than ever. So we have less friends in the world buying bonds. We need to sell bonds. That means we need to sell bonds at higher yields because we've got this inflation that's not really going away. And then the Fed gets forced in what we call yield curve control. And that's buying bonds. That gets you a weaker dollar, and that gets you a real flush into your Bitcoins, your platinums, your palladiums, your hard assets. And your companies, think about, this is a really important point. So in 1981, when inflation was really a threat, the percentage of the S&P that was in industrials, oil and gas and metals, materials, was about 49%, 49% in 1980. And that's when you're coming out of a multipolar world, a world with more aggression, or more kind of a war-torn world that kind of like we're in now, with inflation. So all those groups, industrials, metals and mining, oil and gas, materials, they were 49% of the S&P 500's composition, 49%. Today, they're like 14, 15. And so we're heading back to a world where we're not going to 49%, but those groups plus Bitcoin are going to have a larger piece of the pie relative to, say, your growth stocks or your other parts of the system that really dominate. Right now, there's $21 trillion in the NASDAQ 100. 21 trillion. Like a year and a half ago, it was 12 trillion.
So are you suggesting that the long-term yield curve will be higher and the short-term yield curve will be lower, and therefore we're going to let them inflate their way out, like the banks will be able to borrow on the short term, lend on the long curve, and then sort of, how do you deal with that 80 billion a month? You have asset inflation and you have a regular yield curve not inverted. I mean, walk me through, like in layman, like the basics of the idea of how the Fed will keep rates down. Well,
you're definitely going to get a steeper yield curve, and that means that they'll be holding down the front end rates,
sure,
like a year or two from now. But where it gets a little dangerous is if the long end rates, they're going to have to help the long end, because if the long end rates, because of inflation, are getting pushed up, that puts tons of pressure on mortgages and all kinds of securities that are based off of the long-term rate. So if you have this new secular inflation world and the Fed has to like come in and support that, because like you said, if it's 80 billion a month, the Fed's forced to come in because we're not raising enough taxes, or we're not producing enough GDP to take care of this problem, which we're not, then the only alternative is the Fed. Yeah, so the Fed comes in and basically buys bonds. They definitely buy more front ends. That's a 2 year, 1 year. The curve steepens, but there's also a limit as to how long they can let the long end go, and then that creates that weaker dollar. And the biggest thing is that, remember these words, financial repression. All that means is when inflation, let's just say inflation keeps creeping higher. If inflation creeps up above, say, inflation goes back to 4 or 5%, and say a year or two from now, they're holding down the front end down at like around 2% or something like that. That means the interest rates are below the rate of inflation, right? And that is what's called financial repression. And that's how you get out of the debt. You're actually defaulting in a silent way. Whereas the only other way to get out of a $35 trillion hole is to have what we used to call, and they mentioned this in the Bible, or the debt Jubilee, which if you look back at civilizations the last thousands and thousands of years, the debt Jubilees were very common, fairly common, to have a reset, because societies and governments typically run through these irresponsible times. And so the way they probably get out of this is what we call financial repression. That's suppressing interest rates below inflation, and that drives a lot more money into Bitcoin, a lot more money into hard assets. And that's where you get a real big. That's what I mean. The S&P composition 5 or 10 years from now is probably maybe 35-40% industrials, metals and mining, oil and gas, companies that own hard assets that can protect investors from inflation.
I want to go back to AI for a minute, and your conversation about data centers and power. What do you make of the lack of investment? So this Green New Deal, let's not make any nuclear power. Our data center in Michigan is connected to a nuclear power plant. Where do you see nuclear power going? Like, is it going to come back? It seems the most logical choice, and I'm hearing about all these sort of small modular nuclear power plants, which I have no idea how you do that. I mean, like, someone said to me, why don't you have your data centers powered by nuclear? You could make it yourself. I'm like, I don't want to make anything myself, or I don't want to have a small nuclear power plant, and they're very expensive too, by the way. But what do you think is going to happen around nuclear? I'm just curious if you had any input there.
Well, Mike Alkin of Satcham Cove has been really helpful in the book. And we've done the math around, like, what drives us crazy is that there was, take a look at Tesla like 2 years ago. Tesla was at the highs, and there's all these projections on electric vehicles, but it's similar to AI. No one's doing math on, like, okay, how is the power grid going to support all these new electric vehicles that are supposed to support the growth of Tesla, right? So if your stock's trading at close to $2 trillion valuation, trading at like 200 times earnings, whatever it was back then you're supposed to grow. And then if you're growing and selling electric vehicles, I get the battery side. The battery side's very sexy too with Tesla. But you're going to need a lot of growth. And then all of a sudden, your infrastructure in the United States, whether it be, this is where the story of copper and aluminum gets so sexy in the book, because copper and aluminum are going to support the backbone of the reconstruction of the entire U.S. power grid. That it's literally like most of the power grid is 20 plus years old, good chunks of it at 30 to 50 years old. So this is a complete joke, right? Like, we have this like green revolution, this pitch from the media about this revolution, but meanwhile we're sitting on a skeleton, an aged skeleton power grid. And so same thing with uranium. You can come up with all of these great stories about electric vehicles, or AI, but you need, if you just look at the amount of investment in uranium, because we had this tragedy in Japan, Fukushima in 2011, the entire global infrastructure of all the developed world and much of the emerging market world pulled away from nuclear power. And when you talk about nuclear power, this is like turning around an aircraft carrier in the middle of the Pacific Ocean. I mean, you just can't like you just can't turn these new power plants on. It takes a good decade of enrichment, development, and bringing new mines. And not only just where are the mines? Right now, most of the enrichment and most of the new capacity is controlled in the Kazakhs or like areas close to Russia in unfriendly areas of the world. So we have this huge idiotic thing going on where we have people that are talking about wonderful altruism, like great Pollyannish ideas around green revolution. I love, God bless them. But like you need an actionable plan. And that's where the entire nuclear industry, like look at the URNM ETF. If you add up every single stock, the entire value is like $46 billion. I mean, come on, it's like there's a bathroom in Tesla at one point that was worth more. I mean, like it's absolutely crazy. Like think of like the valuation of NVIDIA, right, is $2.3 trillion, right? Or and the valuation of the entire nuclear industry of the companies that are going to produce and enrich all that nuclear power, all that uranium for the nuclear power is only worth $46 billion. The whole thing doesn't make sense. Like to get to that growth rate. So that's where we've made, a lot of work in this. We've done the math, we've talked to the institution behind us, and I'm just seeing more and more institutional investors look at, okay, where should we be investing in the uranium infrastructure that's going to support AI?
Can you give us is that an ETF that you just gave us again? I think I've seen it before. Or is it an index?
Yeah, the URNM is one of the bigger ones. And what's interesting about the uranium industry, Sprott is a famous company that actually has the ETF for uranium itself. And uranium has been going up. And what's happening is always remember this, in any early bull market in commodities, the first thing people do is hide out in what they think is the safe area. So the commodity itself or the mothership, like the big market cap company in the space. So you think about like the beginning of the bull market in energy in 2020, after COVID, people were hiding out in Exxon and Chevron and oil. They really weren't buying the small stuff, right? And so, but if the commodity bull market matures into the first, second, third inning, that's where capital starts to flow into the tertiary plays, and that's where the biggest upside is. And some of those names are in the URNM. Companies like NXE, NextGen in Canada, that have the reserves, they just haven't had the legal authority to develop them for a whole bunch of regulatory reasons in the world. There's a lot of great reserves in the uranium space, but we just don't have them. There's just so much red tape to stop this because of the tragedy in 2011 around Fukushima and that huge social pushback against nuclear power from developed market countries and governments.
I want to talk to you about the election. So, let's go a little politics here. And I don't need to know whether you're for Biden or for Trump or for RFK. But what's the scenario if Biden gets elected?
Well, both with Biden and Trump, it's fairly what we call MMT. So modern monetary theory, where they remember Biden this is a fascinating election because normally like the last president to lose an election and then go out of office and come back in, I think it was Grover Cleveland Alexander, right? So you got to go back 100 years or something crazy about a year. So what's fascinating about this for Bitcoin and hard assets is if Biden wins, he's a second term, right? And there's a whole bunch of psychological / investment thesis analysis around a second term versus first term. The president can do a lot. He can do whatever, not whatever he wants, but there's no re-election.
He's
right?
He's a lame duck, so he can do what he wants. Yeah.
Exactly. And then Trump, it's the same thing. Trump, normally Biden would be going up against the first term. But in the case now, so we have two potential lame ducks that will be I think they'll go crazy on MMT to get us out of this mess. And MMT just means, your aggressive deficit spending, trying to create enough economic activity to offset, this massive fiscal hole. But the problem is it's a big gamble, because if you spend the money, you can't generate the GDP, then you end up with a real need to go back into financial repression, which that gets us back to our thesis. So if Biden gets elected, first of all, I don't think he serves 4 years. I think that they may change the running mate from Kamala, and I think they probably potentially change the running mate this summer, or they potentially change the whole ticket at the convention, just because it's 4 years and it's very tough for someone in President Biden's age and financial and mental condition to make it another 4 years. I mean, God bless him. But so either way, with Trump or Biden, you get kind of a modern monetary theory, which means that you're really spending a lot on the fiscal side, and you're using those levers to increase deficits and spending.
I didn't think about that. They're both going to be lame ducks. I don't know why that didn't dawn in my mind. And by the way, Grover Cleveland was the last one to also get married in the White House too, wasn't he? Didn't he? Oh,
really? I missed that.
Yeah, the first or second term he got married to his bride in the White House.
Well, with Trump, I mean, Trump might you never know.
You never know. I knew you were going to go there. I knew as soon as I said that, I knew you'd bring that up too. Maybe he'll trade her in. That's not nice, by the way. She's been nice enough to stick by his side. Hopefully that lasts a long time. Because I'm sure she didn't want to put up with everything she heard and saw. Well, I appreciate you being here. For those of you who want to get a free book, the new book coming out, we're going to give away 100 copies of this. We're going to buy them, by the way. He's not giving them to us for free. We're going to buy them and we're going to give them away. Go to toddault.com, or you can text Larry to 31798, and the first 100 people to get on Larry's text message, I'll give you a book. But you gotta watch it all the way to the end. That's the point of this whole thing. You had to watch it all the way to the end. I do want to talk to you offline, but I appreciate you being here. I really, really am thankful. And you're fascinating to talk to. I hope I get to know you a little better.
No, I'm going to explain to you real quick.
Can you walk me?
But don't be rolling yet. There's a reason for it.
So, yeah,